In this video, we're going to talk about how we can use price action rules to help us understand what the market in front of us is telling us. Before we're going to talk about today's session, I want to briefly talk about the problem that's been brought to my attention. And today is there are a lot of social media accounts that pretend to be me. There are a lot of scammers, a lot of fake accounts. They have their social media accounts pretending to be me. They're impersonating me. They even have their own Discords. And what you have to remember that I will never message you first. I will never reach out to you first. Okay? If someone is messaging you first, someone is DMing you first, trying to reach out to you for some private extra mentorship or send some money for some crypto scheme, whatever, this is not me. Okay? So you cannot reply to these people because I'm never out there reaching out to you first. You would have to reach me first if you want something. If you have a question, you want some mentorship, whatever, you would have to reach out to me. You would have to message me first. I'm not going to reach out to you. I'm too busy. I'm not messaging people first ever. All my social media accounts, official accounts, are always listed in the description below this video. So if you have a suspicion that I am messaging you, double check, triple check. Hey, ask me if this is you really messaging me on my other accounts, because these accounts, they look very believable. They even got my style of typing down, got my nuances. So you really think you're talking to me, just like one trader today asked me that if this is really me who he's talking to, and it wasn't me actually, and there was somebody trying to lure him into some crypto scheme, and the trader actually thought that, you know, he was disappointed with my character. He's been watching me for a few years and he really didn't expect this. Well, it's because that's not me. Okay, that's not me. So I'm not reaching out to you first. And I was actually quite surprised. And problem is, I don't even know this is happening until it's too late. Okay, so who knows how many people out there may have been talking to someone who looks like me, and they think that actually they have been talking to me, and that's not the case at all. So just be careful. I'm not going to reach out to you first. I'm not going to offer no private mentorship, no crypto scheme, none of this. If you have any question, anything, you would have to reach out to me first. Okay, so these are fake accounts. They look believable, but this is not me. Okay, so let's dive into today's session. Because we started with consolidation, we have flat EMA, consistent price swings. Right now I can see bearish structure, spike down, market geometry allows me to identify spike and a channel pattern. My default thinking is expecting new extreme to be tested. Okay, we're breaking above EMA. Lower high could be decent, but there was no lower high, break a new high. So you can see there are short-term trends right now being in play. And this is pretty much the only tool we have right now when the structure is just sideways, pure consolidation, nothing much established. I'm just following short-term trends, following the trend line rule, break a new high, uptrend played out. Okay, you're pushing back below EMA. So right now what's going through my mind is a failed second entry long, because this back end channel should get new low, at least test it. Uptrend played out, so there's no reversal, and I want to see new high, first entry long, pull back, second entry long failure, something like this. But there was no failed second entry long, triple bottom, okay, and we have deep retracement push above EMA. So I'm going to consider this as new low tested. Why do I consider this as new low tested? Well, because we're in a trend range and we have triple bottom, okay? In trend ranges, it's actually quite common for trends not to get new extreme tested fully every single time, or just attempts, simply because there's so many buyers buying at the bottom and so many sellers selling at the top. So remember, in trend ranges, good tip to use is that you don't argue when it comes to new extremes in trend ranges once you're near these extremes of the trend range, near these key levels, because buyers buy at the bottom, sellers, they sell at the top. So we are reversing a small break new high. We're pushing back above EMA. So right now I have to work with the structure I have in front of me. And it looks like a trend range, so I'm going to identify new trend range. Once again, flat EMA, consistent price swings. The top part is empty, so I'm going to use the bottom part. Okay, breaking new high, but there is no good signal bar to fade. We're breaking below EMA, so right now, as a price action trader, you are thinking bearish. Why are you thinking bearish? Well, because uptrend played out, so there's no bullish reversal. It looks like a trend range, so expect market continue going all the way down here. And you're thinking about lower high, something like this. Okay, can I get lower high below EMA? No. Okay, this push above EMA confused me today a little bit, because why are we going higher? Is there some bullish imbalance? But shortly after, market reversed down and gave us more information. Okay, doesn't really matter, just temporary bullish momentum, and we are back to the downside. Now you can technically treat this as lower high confirmation. Doesn't really confirm much. Problem is, you already pushed too far down. And also the bar is so big, you're selling so far from the EMA. You prefer a lower high somewhere around here. You know, it's okay setup enough. Definitely not great hyperbolic setup. If you took it, I can see why, but it's quite big. You're selling quite far down. You also pushed quite far down. You know, didn't form that clean. Felt second entry long once again. So far from the EMA, I cannot sell. break a new low. You have decent multiple test. Nice sharp reversal of the EMA, multiple test here. But this spike down already has a break, a new extreme again. So if you took it, I can see why for a small scalp, but not the best setup. No great trade so far. Downtrend played out and you have break, push to a new extreme. And it looks like visual 2 legs down, 1 leg down, break, second leg down. Actual measured move looks good. Can you fade? Perhaps, but the signal bar is weak, so you had to use double bar entry. It's quite big, and also I'm going to zoom out. Since there's empty room at the top, there's more of a bearish bias. So because it's a double bar entry and double bar entry is used when context is stronger, I don't think we can go long just yet. But it's not a bad idea to be thinking about riding this back into trend range. Can you be considering second entry short? Not yet, because we were in trend range the whole time. You can see how long we've been going sideways. You have 2 legs down, no wider downtrend in play as of right now. So second entry short is just too early because this was a consolidation. You didn't get it because you already have first entry short working lower. By the time you get a second entry short, you cannot sell below this massive bullish bar. And this is actually a decent setup because you have double bottom, you're in a trend range, and you have new high, first entry long, pull back, second entry long. It looks like bottoming pattern, static lows, and this is a decent setup, riding this back into a trend range, nice bullish bar, second entry long, double bottom, in a trend range, 2 legs down. You have nice reversal up. I'm gonna redraw spike up. I already have a small break in new high, so I have to be careful because I already have small break and push to new extreme. This is why I'm gonna avoid taking failed second entry short. Also, failed second entry short, remember, it shouldn't really form lower than high low. It shows you that the momentum already played out. You want to see something like new low, first entry short here, continuation, second entry short failure. Not massive spike up, high low, and a failed second entry short lower. It's telling you that the move is too late. It already played out. You're buying too late. So I'm not taking failed second entry short. No trigger here. We're going sideways, going sideways. And this was super tempting high low. This was tempting high low. You can see that this high low is separated from this congestion. Locally, it looks great because you have sharp spike above EMA indicating bullish resumption. The key level is holding. This is why we're working with these key levels. So range is holding. Buyers are stepping in. Problem is, you have a small break new high. Okay. If you have a nice uptrend in play that needs to get new high, this is a great high probability setup. Easy setup. 2 legs down, push above EMA, high low, great signal bar, uptrend is new high. But because you have a small break new high, you don't have no super confirmed trend working higher, so it looks quite stacked when you're watching this live. Now, you can argue that this break is so tiny and so far from the EMA that market considers this as a one visual leg working higher and wants to see the second leg up, which is true because the break is tiny. So if you're watching this like this, you can consider, I can mark it more aggressive. But the problem is when you're watching this live, you have a break in new high and it looks stacked. It's not that easy to take it. If this uptrend is in play, you expect new high, you have the trend line rule, this is a great setup. Okay, unfortunately, not easy to take to trade watching this live, but look at the massive trade this would have been. I'm going to redraw a brand new uptrend. You're expecting second entry long at the EMA the whole time, market just reverse higher. And now you're already at the top of the trend range. You have overshoot, high of the day important key level. This is the high of the day, pre-market structure. So you expect stronger influx of sellers. And this is why I'm going to draw a wider channel like this. I'm not going to draw it like this. I'm going to draw it like this. It also looks like a visual clean one push down. There is no two-legged pullback aspect. But I am at the trend range. I have potential overshoot. Looks like a one clean leg down. This downtrend is in play. Because like we talked about, we are in trend range. A lot of sellers are selling here. Now, this was such a strong spike working higher. Default expectation is still new extreme to be tested. You have a high low here, but it's an inside bar and we cannot take inside bar. So we cannot go long, especially since this inside bar is right into the high of the day. Definitely not a good idea to take the inside bar, which is great because actually it saved us. Because range kicked in, sellers they sold, overshoot, high of the day key level, and market reverse all the way down like this. So deep retracement, you're not arguing with the market as we talked about in the trend range. Retracement is too deep. This is the new structure. You can also look at the top of the move. This is where the push started. This is okay, but problem is you don't have no anchor point just yet. Not enough structure to play this channel. So it's better to just follow this tight channel working lower. And we have textbook trade. New low, first entry short, pull back, second entry short. So you have clean second entry short at the key entry point. Uptrend play away to break new high, 2 legs up, downtrend is new extreme. Everything in price action aligns. High probability setup, 90% chance of success. But it's an inside bar again. It's not a terrible inside bar because you have matching highs at these. But it's an inside bar. The context is stronger here than here because here you're going long after overshoot into key level. Here you have key level far down. Everything is better. So you can definitely tell the context matters. So if you took it, I can see why, but it's an inside bar. I'm not going to mark. Okay, this is not lower high because you already broke the low you're counting from. The lower high needs to form within the low, within the swing you're using to come for the second entry short. So new low, first entry short. And now I have more candles. This downtrend looks more structured. So now I can trust using wider channel, something like this. Okay. I have a second entry short, but I have uptrend in play. Far from the EMA I cannot take. Break a new high and another high probability setup. Double trap, break a new high, 2 key entry points. Once again, great high probability setup. This downtrend is nice, but it's an inside bar, and this one, no matching highs, lows whatsoever. You're truly inside this previous bar. Really weak momentum. So, you know, can't really take it, but great setup once again. It's a shame we had terrible signal bars because these two trades are really great, following price action rules perfectly. You have technically micro double bottom can reset, but there is clear visual aspect to like a pullback. You can definitely see it looks like a one leg broad break, second leg up. So you can treat this as second entry short, although I would draw this trend line like this because we were in a trading range. It's a micro double bottom, so since we're in a trading range, it's better to respect it in case something happens. And now you can actually view this as lower high confirmation setup of the second entry short, multiple key entry points. When you're watching this live, the signal bar looked much better. This is actually a decent trade, lower high confirmation with the better bar. It's a little bit stacked now. Breaking new extreme, downtrend played out. Okay, but the market is not really reversing. Broad 2 legs. Okay, so you can also make a case for some secondary spike and a channel pattern, something like this. Okay, we're going sideways. You know, it's tempting to sell, but you have doji bar here, lower high, bullish body. I can't really take, break a new extreme. So this was good structure to study because from the failed breakout from the top all the way down, you can't even break above the EMA. You can tell that it's no longer acting as a trend range because you can't even push above EMA. It looks like a new downtrend. And here, notice how every single leg is so broad. Push up, broad break, push up, broad break, push up. This is not how reversal looks like. You cannot be buying at the bottom thinking you're going to go back up, okay? Because it's too broad. This is how bullish reversal looks like. If you're thinking about buying, you need to see clean, sharp spike above EMA, not broad consolidation like this. Combined with this downtrend, it's too bearish. Break, new extreme. I'm going to redraw the uptrend. Uptrend played away to break new high, so I cannot take reversal pattern. There is no signal bar anyway. We're back below EMA, and now we're just going quite sideways, nothing much here, and market is about to close. So this is the overall structure for today. It was a very slow trading range day to begin with. Not that many great setups. This second entry long is decent. This hollow would have been great setup had there been uptrend in play. Then we had very nice downtrend working lower, a lot of great trades, but actually signal bars were real bad. But it's a nice downtrend. You can't even break above the EMA, so we talked about why you're not thinking about buying. Even though you're at the bottom, the push down was too strong and there is no clean reversal back above the EMA. So I'm going to wrap it up. I hope you had a good trading day, and I'm going to talk to you next time. Good luck in your trading.